GST Council has now delivered a big healthcare win. Amongst the major headlines that came out of it, healthcare was on top of the chart. Why? Well, because health insurance premium for life, health, and accident policies are now GST exempt, giving policyholders a major financial relief. Also, essential medicines, including vaccines, cancer drugs, life-saving treatments, they also remain tax-free. Critical medical devices like pacemaker, hearing aid, prosthetics, dialysis machines, even oxygen concentrators have been spared the GST, protecting patients' vital needs. That means your overall hospital bills will come down. And not just that, even diagnostics, diagnostic tests, patients and hospital stays, surgeries, outpatient treatments continue to enjoy zero tax, making equality healthcare more affordable for all. Now, this sweeping exemption is, of course, a game changer. However, on insurance premiums, there seems to be some sort of an industry confusion over how much of this benefit will actually be transferred to policyholders. We spoke about this with Dr. Tapan Sehgal. He's the MD and CEO of Bajaj Allianz General Insurance to understand whether this 18% drop in the premiums will actually benefit the policyholders. Listen in.
An immediate drop of 18%, no? Because that is where the GST drop would happen, it becomes zero. So that would happen. Now, in the existing policy, also the good part of general insurance is that it's mostly an annual contract, no? Which means it comes up again for renewal every year. Some policies are for 3 years, but most of the policies are for every year. When they come up for renewal, again, if there's a 0% GST regime, so they get the benefit of that immediately. Now, for the past policy, the issue is that the GST has already been paid for, no? So that would not have any kind of refund. So the issue is for 22nd, policies purchased would have an 18% benefit straight off because of the GST becoming zero. Second, all renewals coming up will have that benefit going forward. So I can commit for my company, not at all. For the industry also, the leaders I've spoken to, they also have committed that there will not be a premium hike happening.
All right, so some bit of clarity there coming in from industry, but let's try and decode that with the reporters as well. Chetan Bhutani, Associate Editor, Business Today TV, is with us. Also joining us very shortly will be Sneha, my colleague. Chetan, just help me understand what this input tax credit actually is. And why are now some, news articles reflecting that if this were to come into play, forget about bringing down insurance, it could actually bring up your insurance by 1 to 2%.
Well, absolutely. Input tax credit is a very simplified term for understanding, revenue-based inputs that the companies take from the government when they pay taxes. So in order to understand what really, as far as, the insurance premium is concerned, as we just heard a bite on what really it's all about, we've got to understand that insurance premiums have to be renewed every year, or most policies are for 3 years. But when it comes to renewal, the GST that companies pay for the government, they have to actually pass it on to agents. For that also, they charge 18% GST. So all in all, it's a kind of a loss-making stream for insurance companies. That is why we saw, we are hoping that premiums don't really come up, because if that comes up, it would compensate for the ITC as well. So all in all, that's why insurance companies are seeking more clarity on what really the ITC would be about. But yes, all in all, we don't expect any major premium hikes for the insurance sector as well.
We're not expecting hikes, but we don't have clarity on what will happen to input tax credit as well. And if I'm not wrong, this is not the only industry where it applies. So if other industries let go, the question really is, at the end of the day, the customer should benefit. If the government wants better policy penetration and wants more people to adopt a health insurance, life insurance policies, then it has to go, even if it comes at the cost of companies actually bearing the brunt. That's something we'll discuss. Sneha Bordani is also with us. Sneha, like I said, it doesn't matter who's paying for it. At the end of the day, it's you and me who should end up paying lesser premiums. Just for the benefit of our viewers, if you had, say, a premium of 10,000 rupees, you were currently paying 11,800 because of under 18% GST. Now you don't pay that, you only pay 10,000.
absolutely. And doesn't that make insurances so much more attractive, Sonal, given that a lot of people are reluctant to buy health insurance, given the kind of experience that they've had. And it's not just confined to health insurance, it's also, in fact, extends to life insurance, ULIPs. And this obviously makes this just so much more attractive, encouraging people to buy these schemes at the end of the day, attracting higher GST earlier, and then no GST now, and then makes it all the more attractive. So all the more reason for people to invest in something of this kind. But I think at the end of the day, if you look at this whole announcement, there's a lot for, for people as far as, there's a lot of, things kept in mind as far as the country's health overall is concerned. I just heard you talk about how our hospital bills overall will be coming down. That's great. Something that I have been watching very closely, and like to touch upon that as well, the increase in the GST of, cigarettes and also gutka. But of course, a bit of a dampener there, and there are two ways of arguing that, and why in the election season has BD been kept out, or BD's GST been brought down to 18%? Were there, electoral compulsions? Yes. But there, as you know, is a fair amount of pressure also from the, within the country also, that, the interest of the farmers, the BD rollers should be protected as well. So that's one thing too. But for me, I mean, I kind of like the fact that sugar in the sense has been taxed higher by way of these beverages and everything else.
Actually, we have a story on that a little later as well. But the sugar is a catch-22. Liquid sugar in carbonated form has been taxed higher. But sugar overall, the slab has been cut down. Ultra-processed foods, the slab has been cut down. So you're right, the overall health, if you see, it's a bit of a mixed bag. And we'll have to take it with a pinch of, not salt, but in sugar in this case. But thank you both for joining us with those updates. Let me quickly bring in our expert as well. Mr. Vipul Jain, CEO of Hospitals at CK Birla Group, is with us. Mr. Jain, I just want to understand industry reaction here. What exactly are we looking at? The intent of the government seems to be very clear, that make healthcare more affordable, get more people under the insurance umbrella, make quality healthcare affordable for one and all. Several initiatives like Ayushman also supporting that. I'm trying to understand, is the industry ready, prepared to pass on all these benefits to policyholders, to people?
Absolutely, absolutely. I think the reduction in the GST rates, especially for drugs, which is the medicine, and the medical devices, will be passed on to the patients. We also hope that the reduction in premiums will lead to better adoption of insurance by our patients, which eventually also reduces the cost of treatment or the burden for our patients and makes the overall healthcare accessible. To give an example, we do not charge GST on healthcare services. If I do a surgery in the hospital, we don't charge GST, but we do pay GST for the medicines that we buy. Now that rate reduces from 22nd, that is directly and immediately passed on to our patients.
Okay, that's good to know. Thank you so much, Vipul Jain, for joining us with those details. Before you go, I quickly want to get a quick understanding from you that, whenever we talk about insurance, hospital care as well, a lot of it is not just about policies being rolled out. A lot of it is implementation on ground. Anybody who's been admitted in a hospital, has taken insurance, knows the pain one has to go through every time a TPA clearance has to happen. So is there conversation within the industry to simplify that as well?
Yes, and thankfully, with whole digitization journey that the country is on, there are now startups who are helping bridge the gap between a hospital and an insurance partner. There are ways in which these folks are helping us automate these processes and reducing the typical 3-4 hour wait that patients have to do to less than an hour. We are still some distance away, but I think I'm very confident us as hospitals and the insurance companies, we are going to make this far, far smoother for the patients.
Got it. Okay, here's hoping that your sentiment echoes across industries and this is actually passed on. Thank you so much for your time, Mr. Jain, here on 5 Live.